Hey, what is up guys? It's Chris with Crypto Profit. In today's video, I'm gonna just go ahead and show you guys how to piece everything together. And right now the markets, I saw that it was a great opportunity to show you guys how to put everything together. And then I'll just also give you my technical analysis of where I think that the market is going in the overall trend. So right now I think that the market's gonna drop, and I'm looking for us to drop down to this previous Fibonacci level. We'll talk about that a little bit more later, but why do I think that the market is going to drop? So when we look at the charts right now, we can see multiple confirmations telling us that we're going to go in a downward direction. What's telling us that we're going to go down to continue to drop is that we have this rising wedge shape right here, and we went into fruition, we bounced around and broke through, and we have full body candle formations below the shape. Also, when we look over to our volume right here, we could see that the green candles are getting smaller and smaller while the red ones are getting bigger, telling us the volume is going down. Also, we broke from this previous channel right here, and we're starting to go to this channel right here, right, telling us that we're starting to transition from one channel to another and continue our downward slope. Also, the RSI gives us enough volume for us to continue to drop so that we break through that 30%. And then our MACD signal right here matches with our moving averages, so we know it's a good MACD signal because we have multiple confirmations from both the moving averages and the MACD, and also the moving averages are starting to act as resistance. We touch it, get rejected, and go down, and the same thing is starting to happen here, right? The old support is acting as resistance. Notice how we try to break through and we're going to continue to go drop. So that's why I think that overall we're going to go ahead in a downward direction. Also, the macro trend is telling us that we're going to continue to drop, and I'll show you guys the macro trend and why it's showing us that we're going to continue to go in a downward direction. However, there is a chance that we could potentially go up, so I'm going to tell you guys what you guys should be looking out for if we're going to potentially go up. Another thing that's not helping the case for us going up though is that we try to break through this Fibonacci level right here and got rejected. And notice how when we were starting to create higher high after higher high after higher high, and then once we got rejected by that Fibonacci level, we started to create lower highs. So I'm looking for the exact same thing to happen, for us to touch this Fibonacci and this resistance level, for us to bounce off of it, and then for us to start creating higher highs and to start trading above the moving averages. And then if I see that, then I could potentially look at us going up in the short term. And what I would be looking for us to do is to create an inverse BART pattern. So right here, a BART pattern would be like we were here and then we drop down. So I'd be looking for us to do the opposite, for us to we drop down, go horizontally, and then jump up. And then for us to go potentially up to this area right here, that's when I'd pull out of my trade, because after we do that, we can go ahead and see a short-term reaction rally and us going up, right? But once we touch this right here, there's multiple points acting as resistance, and then we're going to have a massive drop down so that we can continue the macro trend in a downward direction, and we can test that yearly low again. So we have both the Fibonacci level, support and resistance, this sloping shape that we'll talk about in a little. So everything is telling you that, like, hey, this is a really hard spot for us to break through, and we also have massive clusters of candles acting as resistance, so it's going to be a hard point for us to break through. So anyways, let's go ahead and go to the 4 hours so we can look at the things. So notice how we have like these clusters right here. That's going to be acting as resistance, all this right here. So it's going to be really difficult for us to break through. So when we break through and I place a short in this area right here, I'd be pulling out once we touch this Fibonacci level at the 33.83, and then see how the market is going to react. If we're just going to bounce around and continue to drop down to this next zone right here, which is going to be a new yearly low, or if we're going to see a short-term reaction rally and bounce up. You know, I don't try to predict the markets. I let the market do its thing and then make decisions based on what the market is telling me. Anyways, you know, the RSI here is looking like we could potentially go up, but I'm not paying attention to it because overall everything else is telling me the exact same opposite, so I'm not going to take it very seriously. Let me get rid of these short-term moving averages and add a long-term ones, so our 50, 100, and a 200. Notice how we're trading below our moving averages. That's not helping things out. We're trading below all our moving averages, both on the 4-hour, on the daily, and on the weekly. And then on the weekly, signs that are really bad for us going in the upward direction is that we have our 50-week moving average and our 100-week moving average about to create confluence, and they're about to switch spots. And also that previous low was the 200 weekly moving average. Once these lines create confluence, we are going to break through and continue our descent down to the crypto abyss. So guys, not looking good for crypto overall, but good for us traders. We also have this descending triangle. When we broke through, we're starting to create the formation of another descending triangle. That's not going to happen right now, but once these things go into confluence, we're going to continue to go down. So right now we're just going to be bouncing around the area, touch this new yearly low at 3100, bounce out possibly even to 4000 again, and do that a couple times before we start continuing to go down, like we did in this area right here when we were around 6000, 7000 area. We bounced around it, finally broke through, and continue to go down. So that's how you would put everything together and how you would use everything together. Another thing that's just really not helping out is that when we go over, this is where you would place your trades. When we look over to the 24-hour trading volume, it's only at 5,000, which is extremely low, guys. You know, this number divided by 24, and you can see how many people are actually trading. It's not very many people at all. So this keeps declining. Yesterday we were at 14,000, and now we're only at 5,000. So there's going to be a massive move, either in an upward direction or in a downward direction. I'm leaning for us to go in a downward direction, but I showed you guys what to look out for if we, for whatever reason, go up. As always, remember to have a great day and to trade responsibly, and thank you guys for watching.